And he's like, well, you just scream sales guy right out of the gate. He's like, you're just up to people and you're just like, hey, I want to do a portfolio review. Hey, I want to, and he wasn't saying it to put me down. He was just saying, he's like, stop vomiting your sales on people and try and get to know them first. And then you could present whatever offering it is you're doing to them once you actually have a relationship with them. Once I made that switch, it was, totally different. And I'm noticing the relationships that I have, they're a lot longer too.
Yeah, and more fulfilling, I'm sure.
Yeah. Yeah.
Relationships change the game. Most real estate investors think success comes down to finding deals, but the people who control the outcomes control the capital. Today's guest has spent more than 2 decades operating inside Wall Street, private markets, and institutional capital, structuring deals, raising capital, and deploying investment strategies across real estate and private credit. Today, we're pulling back the curtain on how capital actually moves behind the scenes. Welcome back to the Perpetual Growth Podcast, the show where we explore the strategies, insights, and human stories that help you to grow your business, strengthen your relationships, and elevate your life. Because growth isn't just about what you achieve, it's about who you become along the way. Now, quick ask before we dive in. If you get value from these conversations, please follow the show, share the episode with someone who would benefit from it, and leave a review. It's how we keep bringing incredible guests and powerful ideas to the show. Today's guest has spent over 2 decades operating at the intersection of capital markets, real estate investing, and private equity. Robert Costamores is a capital markets and fundraising executive, currently serving as president of Myome Equities, where he leads capital formation, investor relations, and transaction execution across distressed real estate, fix and flip strategies, and ground up development nationwide. Throughout his career, Robert has built and scaled capital raising platforms, managed teams of financial advisors, structured complex private placements, and worked directly with accredited and institutional investors. His expertise spans from private equity, structured finance, private credit, and investor psychology, all the elements that ultimately determine whether deals get funded or fail. Today, we're going to talk about how capital actually moves in real estate deals, the psychology of raising money from investors, what separates successful operators from those who struggle to fund deals, and what today's capital markets really look like behind the scenes. Robert, welcome to the Perpetual Growth Podcast.
Thank you very much. And you make me sound like I do something. I
Well,
appreciate
that's the
it.
idea, right? No, absolutely. Robert, I always love studying here because I think it reveals a lot about who someone really is and how they approach life and business. What does growth mean to you right now in this season of your life?
So first of all, I got to tell you that, I love the name of your podcast, Perpetual
Okay.
Growth, because
Mhm,
I'm always in the mindset that you always have to be growing and learning,
mhm.
whether it's as a business person, a parent, a husband, wife, whatever it is, it's you're always in perpetual growth. And I'm not just repeating it, just resonated so much with me, ever since, we booked the podcast and, looking at the name, and it really resonated for you. And right
Yeah.
now, growing, in the business side, we're looking to double the amount of assets that we purchased this year from last year. We're a little behind the queue on that one for this year, but we will probably be able to catch up through the spring and summer, and then, into the fall and winter, and, supersede everything because we're expecting things to be um, very good for us this year.
Yeah.
On the
Excellent.
personal side, I'm always looking to grow. I'm a father of 2 kids,
Mhm,
married, and I'm always trying to do the best that I can. Just yesterday, my daughter got into a little accident, got a flat tire, so I had to leave the office, go and fix the tire for her,
mhm.
and then I had her drop me off at the tire store to get it fixed, and then I dropped her off back at school. And she said to me, she goes, I did this on purpose because I didn't get to see you that much this morning. And then she's getting out of the car and she goes, thanks for saving me today, Dad. And I was like, oh, wow. I
Yeah.
was like, well, you're welcome. It kind of
Yeah.
like meant a lot to me. So
Yeah. No, it
clearly,
does.
clearly I'm doing something all right for my daughter to joke around like that with me.
Yeah. No, that's kids are an absolute gift. I mean, it's so funny. I know for me, I mean, one thing I love that you pointed out is in earlier seasons of my life, I mean, virtually 100% of my focus was growth in business and personal development. And then over time, you realize there's multiple fields of play.
Yeah.
We have
Yeah.
many dynamics to our life, from health to our interpersonal relationships, spouse, kids, in every context. And I mean, if we're not growing in each field of play and also remembering to shift hats because where we
Oh,
how we show up successfully in business is not necessarily going to translate to creating a successful relationship or being a successful parent is so critically important. So I love that mindset of diversifying your education experience overall. Now,
oh man.
shifting to business, I mean, how has your definition of growth evolved throughout your career in finance and capital markets?
Well, when I was on Wall Street, it was about how much money you make.
Yeah. Yeah, right. Yeah,
That
yeah.
comes from how many accounts you open, how much money you raise, and things of that nature. It's all tied to something, but
Yeah.
at the end of the day, it was always how much money did I make last year.
Hmm.
I've transitioned that more into, kind of like how do I help people? What do I do for them? And then, oh, by the way, how much money did I make this year? But I've learned that if you do little incremental steps throughout business, it all ties to the same thing. And, generally you'll get back to, making the money if you haven't been. And if you are making the money, maybe you can grow it a little bit more. And it's those
Yeah.
little micro steps and things that you could do for people and within the business that can help you get to the next level.
100%. I mean, a great metaphor. It's so funny because most people tend to go for the the lottery ticket, the home run swing. I mean, whatever you want to refer to it as metaphorically. But one of my mentors really beat that idea into me. I mean, it's like as little as a 1 degree shift. Like imagine you hop in a plane, you're flying out of Seattle, you're headed to Hawaii, but you start making a 1 degree shift, and all of a sudden you're in a completely different part of the world. But that
Completely different.
applies principally. I mean, one, we have to know the target, the end destination, but two, it's those small shifts, the little steps that stack and compound over time that can really lead to exponential growth. So I absolutely love that mindset. Now, one thing, let's peel back the onion on something you just said. I mean, most entrepreneurs and real estate investors focus heavily on deals, but the reality is deals don't happen without capital. So what do most operators misunderstand about capital markets?
So it depends on where you get your capital from. If you're going through accredited investors, I think most operators miss the ball or boat, whatever you want to call it, on the fact that with accredited investors and individuals and the retail public, I should say, it's tied to the fact that it's an emotion for them. Although it's
Mhm.
money, it's an emotion. And you have to deal with the client's emotions, and you kind of gotta, caress them and make sure you're doing everything for them and getting them to where they need to be. And I mean that in a meaningful way. I
Sure.
don't mean that like by, have to sell them. I mean that you have
Mhm.
to, let them ask the questions they ask. They have to, it's on their time frame. So although you want
Yeah.
to move on your time frame, you could do things to move it along. It's always
Mhm.
on their time frame. So that's
Mhm.
first and foremost. When you're dealing with institutions or family offices or RIAs or things of that nature, it's solely off of statistics, analytics, and numbers. And if
Mhm.
you have the data there to justify for them to invest with you, they'll invest with you. If not, then they won't. But both of them, you could tie them both in together. And it's all about, the follow up. It's all about, being there for them. And it's all about presenting the information to everybody in a timely fashion and just being able to answer the questions that they have. And I know it sounds so simplistic, but it is so simplistic at the same time.
Well, when you have the right strategy, right? It's
Right.
like anything. I mean, if you're, I always said from stages that there's nothing dumber than running the wrong direction enthusiastically. And it's like when what we want to do is actually execute on a proven system and process. But without that system or process, you're doing a whole bunch of throwing stuff at the wall and seeing what sticks.
Yeah.
And that's where leaning into experts that where we can condense and consolidate their decades of experience into days, that happens to be one of the wisest investments in my opinion that we can ever make. I mean, what would you say that capital is harder to secure than the deal itself, and if so, why for most people?
Yeah, it is harder because the deal is just numbers. You can
Hmm.
move through them easily,
Hmm.
but the capital is, usually tied to something or someone, and you kind of have to go through that gatekeeper to get that asset. Whereas the deals are always there.
Hmm. Yeah, exactly. I mean, it's one of those things. I mean, that's that limited mindset versus an abundance mindset. And so many people think that there's a limited number of opportunities to invest, but I mean, truthfully, there's an exponential number. I mean, I won't dive into the RAS, reticular activating system, and just focused awareness. But what do you think? What would you say is one of the things that separates individuals who consistently raise capital from those who struggle?
So it's the old, I guess it's the old, story of you have to build up your pipeline, whether it's the, institutional side, whatever it is, you have to build up that pipeline and keep that pipeline full. And if you can keep that pipeline full with, prospects, people that you're just having conversation with, you're out there networking, whatever the case may be, you'll always have capital to raise and you'll always have people to go to. If you don't always have that pipeline full, you're going to struggle to raise capital and it's going to be tough for you. And you got to get through that. And even through the tough times, which I'm kind of going through that right now. It's a little bit more difficult, though it's getting back on track.
Yeah.
Um, um, you still have to push through and still have to make those calls and reach out to people, send those emails, send texts. Even when, nothing's coming in and you think it's the end of the road, the end of the world, you still got to push through because there's always something at the end of the road where you could raise that capital. And if you keep pushing forward and you keep having a positive attitude, just like you said, running the wrong way with the, with,
Enthusiastically, yeah.
enthusiastically, that was the best statement. But
Yeah,
at
yeah,
times you have to do that. It's kind of like
yeah.
acting as if, but
Hmm.
you always have to do that and you'll always get through it. And even when it seems, I've always had a theory, it's always darkest before dawn. So if you just keep pushing, sun's always going to come up.
It's consistency.
Yeah,
It's
well
like
that
people get things get challenging. All of a sudden, people are like, "Oh, this isn't the right thing. I'm not really actually supposed to do this. I'll never be successful." Whatever, negative or disempowering narrative they want to tell themselves. But reality is like what pops into my mind is I remember this cartoon, and there's two guys digging a tunnel, right? One guy, he's got the pickaxe over his shoulder. He's walking back this way. The other guy's in his final swing, and there's this whole stack
right
of gold
there.
on the other side of the
Yeah,
wall.
yeah.
It's like we have to keep
Keep
swinging.
going.
What would you say is I want to talk about both the psychology and the strategy behind successful capital raising. I mean, what would you say is the psychology behind successful capital raising? I mean, you might have just summarized it in what you said, but is there anything you would add to that?
No, but it's what you said. It's the consistency, and the
Hmm.
psychology goes with the consistency. If you're
Hmm.
consistent in staying in touch with people and always having a pipeline and always having somebody to go to, you'll always have that positive mental attitude or fortitude or whatever the case you want to be.
Hmm.
If you don't, the psychology of it will get into your head. However, you can get through that by keeping a positive attitude. And what would you say? Running the wrong way enthusiastically.
There's nothing dumber than running the wrong
I
direction
can't,
enthusiastically.
that
Yeah.
is one of the best statements.
Yeah.
But if you are running in the wrong direction enthusiastically, you could always switch tracks and get back on track and get to that the right way. And then maybe people won't even notice you went the wrong way originally just because of the way you were
Yeah.
your enthusiasm. And I know where you were going with that. I'm not trying to switch it around and try and
Sure.
make it a positive thing because it's
Yeah.
not.
Yeah.
But it's all about the psychology of it. And regardless of where you are in your capital raise and regardless of how you do, you always have to keep a positive mindset within yourself
Hmm.
to convey to everybody else. As long as you have a right offering or the right deals and everything's in place and everything works, if you have the right mental psychology, you're going to
Yeah.
close deals, you're going to raise capital, and consistency
Hmm.
is the biggest thing to keep you to that
Hmm.
state where you do have a positive, attitude.
Now, if somebody is relatively new, and they're like, where do I start? Yeah, one of the things that always comes to my mind is oftentimes the most obvious, the lowest hanging fruit is the thing that most people are oblivious to. It's like, where do the people with money, with capital, actually hang out, right? It's like, what are the things that they do? I start thinking about, where can I go build and develop those relationships, ideally paralleling in a hobby that's something that I actually enjoy. Whether that's like golf, or some individuals might head to the cigar lounge, or maybe they're into yachting and sailing, or it can be a multitude of things. But that's more external, initial, high level relationship based. When you start to get more strategic, where do people go? I mean, what are some simple tips, strategies? Like, who should they look to first?
Yeah, no, you hit it right on the head. And going to, the cigar shops, the
Hmm.
golfing, Jesse Itzler, I don't know if you know who he is. He's
Hmm.
somebody that I've been following for, quite some time now. I met him a couple times, read one of his books, and it really touched on me. Living with a Seal for 30 Days. And I was going through something back in 2015. I had shoulder surgery, and my psychology, I wasn't there. I didn't have the
Hmm.
right mind space, and that book, picked me up and got me back into it. And his thing is going out to having lunch where you think. high net worth people are, people with money, just sitting there, being around them, going to the one of my favorite places is a cigar lounge. Just go to a cigar lounge and just ask people questions, just build relationships. If you could build relationships, that is one of the best places to start. And it's actually a place that I've been kind of forgetting about of recent because I've been so busy with the work and to go to places after work. I've been kind of like pushing it off. I'm like, oh, I'll do it next one, next one, next one. And
especially
now
as a
it's been
parent.
yeah, and it's been like 6 months now, and I haven't been to a physical in-person networking event, which I
Hmm.
need to get back to doing.
Hmm.
So it's not where do you start, it's just start. It's
Yeah.
literally just start. It doesn't matter. You're gonna make mistakes. You're gonna screw up. Just start.
Hmm.
I always say that a plan executed now is better than a perfectly executed plan, 6 months from now.
Hmm. Yeah. No, it's very true. Like the number one most important thing, like I always tell my clients, I mean, never leave the sight of a goal without taking some sort of action towards its attainment. I mean, no matter how small or trivial it may feel, what we are doing is building momentum. We got to spool up that flywheel. So, I mean, even if it's something as simple as time blocking time with yourself on the calendar, scheduling those events and finding those opportunities to get out and network. Now, the network aspect, I always want to emphasize though, I mean, it's so important to be mindful of selecting the right rooms.
Right.
Not to say that there's anything wrong with your local chamber events and BNI groups and things like that, but typically those are going to be lower level operators. If you're going to look for people with real capital, you have to start thinking about where do those people actually spend both their leisure time and their professional time so we can get in more qualified rooms. Otherwise, there's, well, like we said, there's nothing dumber than running the wrong direction enthusiastically, but
Yeah.
it's still better than starting nowhere. I mean, is there any particular tip or strategy? How do people start to invite these conversations? I mean, how do you what seeds that should they be planting? What type of question they should they be asking? I mean, where does that relationship and trust building start within investors in your mind's eye?
Um, I I just I simply just say go out and shake hands and kiss babies. And like if you
Hmm.
are in the wrong room, like you said, that's
Hmm.
okay because you'll know when you hit the right room. Like for years, I
Right.
was going to chamber meetings and everything,
Yeah.
and you're dead on with you have to be in the right room. So let me just
Yeah.
clarify that.
Yeah.
Like because I've done the chambers, I've done the BNIs, and I call them drive-by business card givers, and they're just
Yeah.
like, here, call me, just here, call me. It's like, wait,
Speed
what?
dating for business. Yeah.
Yeah, and it's it,
Yeah.
it it's kind of it's great because it gets you a lot of business cards. So I
Hmm.
will tell you that, but
Hmm.
you want to be in rooms where people build relationships and will have conversations with you, and they'll ask you what you do, and they'll when you ask them questions, they're more than willing to answer them, and it's a room where people listen to you as opposed to trying to pitch you. And if you're
Hmm.
pitching more than you're speaking, this is the biggest thing. If you're
Hmm.
pitching more than you're speaking, more than you're listening, then you're in the wrong room.
Yeah.
Because if you could listen to people and let them talk to you and tell you who they are, you can get a good feel for the rooms that you're in. So
Yeah.
that's one of the
100%.
biggest things. And as much as you want to be pitching, you should be listening.
Yeah. What would you say? And I totally agree. I mean, it's like two ears, one mouth, right?
Yeah,
It's we have twice as many opportunities to listen as we should be speaking. And I mean,
yeah,
and what's interesting too is when you just learn to leverage the power of shutting up and asking great questions. People love to talk. They love to share their knowledge, wisdom, and experience. But most people are so busy talking about themselves that they don't create the platform. It's
yeah,
like
yeah.
hand the other person the microphone. What mistakes? I mean, I think you just identified one of them. It's you might be in the right room, but when you're trying to be the one owning the stage, that's going to be a problem. I mean, that doesn't help develop relationships with anybody. What mistakes would you say new sponsors make when they are approaching investors?
So I made it when I was a financial advisor for many years, and I was going up to people and giving them my business card and saying, "Hey, I'll do a free portfolio review for you. Hey, I'll do a free portfolio review for you." And one guy that I wouldn't say he's a mentor, but he's somebody that I've looked up to, and we were at an event, and somebody had brought this high-powered attorney up to me to introduce me, like, "Hey, Rob, I want to meet, introduce you to him." And he had done this huge transaction here in New York, and Scott knew him. He's like, "Hey, what's up? How you doing? But it's been a while since I seen you. Oh my God, I can't believe." And the two of them were getting. So then, they walk away, and so I said, "Scott, you know everybody. Like, how is it that you know everybody? And it's not even like you go up to people and do what I do and everything. And he's like, well, you just scream sales guy right out of the gate. He's like, you're just up to people and you're just like, hey, I want to do a portfolio review. Hey, I want to. And he wasn't saying it to put me down. He was just saying, he's like, stop vomiting your sales on people and try and get to know them first. And then you could present whatever offering it is you're doing to them once you actually have a relationship with them. Once I made that switch, it was, totally different. A lot longer of a process, but totally different. And I'm noticing the relationships that I have, they're a lot longer too.
Mhm. Yeah, and more fulfilling, I'm sure.
Yeah, yeah.
Relationships change the game. I remember that same mindset shift. It took a while, and you're right, it's a longer path to really be able to invest the time in building and fostering and developing that relationship. But ultimately, it's a faster path
Hmm.
because otherwise, it's just like beating your head against a concrete wall, hoping that somebody bites. Versus, let's develop this relationship, and over time, that's where things really start to again stack and compound. Now, I want to bring this back to something practical for listeners. I mean, let's say someone listening right now is in real estate. They're an operator or entrepreneur trying to raise capital for deals. What are three things they must get right before approaching investors?
Making sure you have the right deal. Um,
Right deal.
buying is when you make the money on
Hmm.
the purchase. If you get
Hmm.
that wrong, then you're never gonna recover from that.
Hmm.
Um, Making sure you're buying in the right area, the purchase price, the deal is the biggest thing. It's
Right.
not the only thing because there's some things in the deal you can recover from, but it is a big thing. And don't be afraid to ask people for help either. It's if are having trouble with something, ask people for help. Make sure you're paying the right price on the buy.
Yeah.
Make sure you have the right deal, and don't be afraid to ask for help. And people love to help people out, and especially if they're going to put money into your deal, they might be willing to say, "Hey, kid, you're doing this wrong, that wrong, but if you get it to this point, I'll, give you 100,000. I'll give you two hundred
Yeah.
thousand, whatever the case
Yeah.
may be."
But yeah, I mean, you got to know your numbers. I mean,
Yeah,
it's such a simple statement, but if you don't know how to ask or ask the right questions, you're never going to get the right answers.
right,
Commercial real estate investing, multifamily commercial real estate. I mean, if you're not properly analyzing cap rates, NOI, NOE, future liquidation events, timelines, like then how are you ever going to properly determine or appropriately determine if you're getting into the right property? It's like,
right.
and you said it at the very beginning, and I think this is one of the things that I literally was having this conversation with my mom in a different context just last week. But nonetheless, I was like, you have to remove emotion from the equation. I don't get emotionally attached to any investment because it is exactly that. It's an investment. If the numbers make sense, it makes dollars. I follow the numbers. Numbers tell a very clear story. They paint a very clear picture. And it sounds like, I don't know if you would add anything to this, but one of the fastest ways to lose investor confidence is just by the wrong deal. We got to make sure that
Yeah.
we do our due diligence, find the time, ask the right questions. When it comes to support, where do you turn, or where should one of our listeners turn?
What do you mean by support?
Well, you mentioned like get help if you need it, right? Like where would you recommend people start getting support, education
Oh,
when it comes to investing strategies? I mean,
well, I mean, we're in such a definitive time where information is at everyone's fingertips. I mean, there's
mhm,
so much information out there you don't even know what to believe anymore. That's how much information is out there. So the internet's a great place,
yeah,
but at the same time, you don't know what to believe when you see it. So ask
yes,
people who have been there. Realtors are they're good, but they could also give you some insight onto the area, to what you're buying, to the ARVs of the properties,
mhm,
or what the market value could be. I'm talking about single family. I know you were talking
right,
about commercial, but
hmm,
again, commercial real estate agents are a lot better than residential. Not
right,
knocking
sure, sure, hmm,
but residential realtors are more salespeople and trying to get people into houses, which I get.
right,
They're not
right,
numbers people. Some of them are very, very smart. Others just, they're not. But they are a good resource in trying to help you get some deals and get the properties or the numbers that you need. I'm trying to get the words out of my mouth
yeah,
and I can't.
yeah,
And then, find contractors that could help you out. Find people who have done it before. Find people who have, they may not have bought a lot of real estate, but they have real estate.
Mhm.
see, what they did to buy a property, see, where they went wrong, the mistakes they made. That's where you can learn a lot too, is, learning from people's mistakes. I mean, the first investment property I ever bought, I lost my shirt on. I mean, from the time we closed on it, it was a mistake. It was pardon
Yeah.
my French, it was a
Mhm.
hellhole.
Yeah.
And I learned so much from it. We were stuck in it for, I think it was almost 10 years before I was able
Hmm.
to unload it. And
I've been there. Hmm.
it sucked the life out of me for the first 5 or 6 years, but I learned
Hmm.
so much from it. And one of the things that I learned is that when you buy right, the whole deal makes sense and it's so much easier. So
Yeah.
don't be afraid to ask questions from people, of people. I'm
Th-
sorry.
that's where coaches and mentors, in my personal opinion, are worth their weight in gold. I want people that have been there, done that. They've already made the mistakes, so it prevents us from having to pay the dumb tax in the future. We can learn from what they already did wrong, and we can condense their decades of knowledge into days so we can get those same results faster. Now, you work heavily in preferred equity, structured finance, private credit. I mean, what is preferred equity, and when does it make sense?
So we don't, we, it is preferred equity, but the way we structure our deals is we get institutional debt facilities to give us a
Hmm.
majority of the money. And then we'll
Gotcha.
go out there and we'll get accredited investors to fill the capital stack. And it's usually like a minor part of the deal, but it's a big part of the deal. And they'll come in and we pay them a nice little percentage, which is it's currently 15%. It's not about, and they get their 15%, and then we get anything above and beyond that. Once we,
That's a fantastic return. I
yeah,
mean, that
yeah.
well outpaces the stock market. So, I mean,
Yeah,
wh-
yeah, yeah. Well, the
that's
past 2 years, no. The past 2 years, the
sure,
markets have been doing
right.
over
Yeah,
20%,
yeah,
but
right,
we all know
right.
that that's not,
But
real
I mean,
returns.
long term, I mean,
Yeah,
if you
yeah, yeah,
want
yeah, 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 yeah,
consistency,
yeah,
yeah,
yeah.
yeah,
I've been
yeah,
getting that a
exactly.
lot. That's why I've been
Yeah,
saying
yeah,
the past couple of years it's not outpacing it. But yeah,
yeah.
no,
But
you're
I
right.
mean, we play the long game in the stock market. I mean, if anybody's
Uh-huh.
looking at just the last 2 years, they're
Oh,
missing
they
a critical
do.
piece of
Oh, please.
information. Shit.
People will give you any rebuttal they possibly can to tell you how, your deal's not good. Like,
Yeah,
well, the
till
market's been doing
next year when it
30%.
tanks.
Yeah,
Yeah.
yeah, 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 yeah.
Maybe
Yeah,
not
yeah.
literally next year, but you know what I
Yeah,
mean.
yeah, yeah. No,
Yeah,
no, I
we had one
know.
of the longest bull markets in history. That was a fantastic period of time, but we also know what happens cyclically to any market at some point. So it's not a question of if,
I would
it's
tell my
when.
clients all the time, if you're going to call me up and cheerlead when a stock goes up, don't call me and cry when it goes down. Because you have to have both.
Yeah.
It's one, if something
Yeah.
what goes up must come down, and you're
Yeah.
not going to have the growth without the downtimes. And although we
Yep.
don't want
Hmm.
the downtimes, obviously you want to
Hmm.
mitigate your risk as much as possible. It happens. So
Yeah.
yeah, you're right.
Now, one of my mentors used to call it the success cycle. It was like, most people think about success when they look at any, ultra successful or wealthy individual, and they imagine just this straight line, like it's linear growth. But in reality, it's more like this and this, where we
Yeah.
loop back. We have some really hard lessons. We have to take a couple steps back, and then you spring forward. And you build off of the previous year's mistakes, and then you run into that next level. I always say new level, new devil, right? It's like next level life always requires next level decisions, but that's going to depend on, again, putting ourselves in the right rooms. I mean, how does private credit fit into real estate investing then? So, I mean,
Oh, it's a
paint
huge.
a little bit picture of that for you.
It's a huge thing. A
Hmm.
lot of our lenders are private lenders,
Hmm.
and it's a lot easier to go through the approval process on the private side than it is on the bank side, so to speak.
Yeah.
And
Hmm.
you generally pay more, but it's usually short-term money, and
Hmm.
it's a lot quicker. And if you can get lines of credit with the private credit, or you get approval ratings and things of that, where it's kind of like if you go into this market and you're buying this, we'll just it's within this range, we'll just approve it right away and just submit the application. Whereas when you go to a bank, it's the same thing every single time, and it's three
Yeah. Yeah.
months at a
8 months,
minimum.
yeah, loopholes, and you got to,
Yeah, yeah, yeah.
I mean, it's just, yeah, exactly. I hear you. I mean, what, from a high level perspective, I mean, what are some things that people should be doing in terms of market analysis? I mean, how are we determining where the greatest investment opportunities are? What are the questions that they should be asking, the things that they should be avoiding? I mean, obviously we want growth. I mean, looking for markets that are burgeoning markets is going to be a great opportunity. I would imagine, then relative to residential versus commercial, or maybe it's commercial multifamily, it's going to be things like proximity to schools. What are the crime rates? What are the quality of the schools? I mean, what are there other, high level strategic insights that people should be asking these questions up front that a lot of people tend to
Yeah.
overlook?
Yeah, you got to figure out what you're looking to buy and what your ultimate goal is.
Mm,
Are you looking to fix and flip? Are you looking to hold? Are you looking for rent? Are you looking for commercial where you need retail, tenants coming in? Are you
yeah.
looking for, multifamily? Are you looking for condos? So you have to find out what it is. The price point where you're buying and where you're looking to sell is a huge thing too. If you're buying $1 million property in a war zone, it's not going to make sense, obviously. But at the same time, if you're buying, $150,000, small little property in $1 million town, it's kind of like, well, why is that there? And, how quick was it on the market last time? And, what are the things about it? So you want to make sure you're in the right area for the asset that you're buying. And the same thing goes for commercial too. Look at the houses around you. Look at what you're buying on. For residential, are you on a double line? What's across the street from you? Is there a highway? Look at the properties right next to you. Look at the properties on the next block. What's going on in the area. And that's where realtors can come into, real handy. They'll tell you exactly what's going on in the neighborhood. But
Good realtors.
yeah.
Yeah.
Well, most of them know their areas. Most of them
Hmm.
know the area.
Hmm.
Um, but knowing what you want to do with whatever you're buying is the biggest thing. And then
Hmm.
you got to
Yeah.
fit the area into that. So,
That's that target. I mean, we have to have clarity on where we're going. I mean, I
yeah.
always tell people fuzzy targets don't get hit. I mean, it's one thing. We just got to get clear on the objectives. I mean, what trends are you seeing in capital markets right now?
Um, well, in the capital market, I think that, last year people were a little tight with their money just because they didn't know where interest rates were going to, fall. They lowered them a couple times last year.
Mhm.
Coming into this year was a little, they're a little tight, but it's starting to loosen up again, and people are starting to see the future of, where the economy and everything can go. And the fact that we're at war with Iran right now is not the greatest thing, but it's really not affecting too much as of right
Interesting.
now. I think
Hmm.
if it gets worse, I know we just went into a 2 week ceasefire, but
Hmm.
if it does get worse, it'll get much worse. And we're
Hmm.
dealing with Iran and America, which is two. I know people don't look at it this way, but Iran is a powerful country, although they're tiny. Um, they've been waiting for something like this for a long time, so hopefully it holds out. I'm confident it will. I'm not. Don't think I'm speaking. Not
Sure.
confident. I think
Yeah.
it will. But if something does come out, then it could get tighter. But as of right now, things are loosening up. People, I don't know where you are, but the winters were bad here in New York. So the sun's out shining. It's starting to get warmer. And I know that there's a lot of snowfall throughout the country too. So things are starting to
Hmm.
warm up. And, I think people are warming up as well.
I'm in Arizona, so we're already in the low hundreds.
Ah, you had to hit me with that one, right?
Yeah. I'm like, what's snow? What's rain look
Yeah,
like?
yeah,
No, I'm
yeah, yeah,
originally
yeah,
from
yeah, yeah.
Washington State, though. So, I mean, I went from one end of the great polarity to the other.
But even
Tell me
but
that
in the Pacific Northwest, you even have more consistent temperatures than you do here in New York. So it's,
we do.
you
Yeah,
know,
there's less volatility. It's just,
yeah, which I never
everything.
knew until I had
It's
a
just
I
a
had a
lot
bunch
of
of
rain.
client yeah, I had a bunch of clients at Nike, and I went to visit there and I fell in love with it up there, just because of every
Well,
time I was there, it was the same temperature. I'm like, what? How is
yeah.
this possible?
I always tell everybody, I mean, it is the most beautiful place in the world. I mean, just for about 3 months out of the year. It's the other 9 months where you start to question your sanity a little bit.
Yeah, yeah. So I was
What,
I was I was only there for 3 days at max, so it was it
you
was
know,
fun for me, but
I,
there was a lot of rain when I was there.
I'm always big on the power of anticipation. It's like one of my favorite quotes, Wayne Gretzky, right? Somebody asked him, what made you the greatest hockey player of all time?
Go to where the puck
And
is.
he goes, well, most great players skate to where the puck is. I skate to where the puck is going.
Going.
He had
Yeah.
studied his competitors. He had knew exactly what they were going to do before they did it half the time.
Yeah.
And try to apply those same principles in business. I mean, that comes down to watching a multitude of things, like what's happening nationally, internationally, what's going on in the markets. I mean, analyzing trends. It's like, in real estate, I mean, we know many people are being starting to be priced out of the residential market, which now is creating a massive influx in development in the multifamily side of things. So for me, that's where my mindset starts to shift. It's not like 20, 30, 40 years ago where we could buy houses cheap. Now it's very challenging for many people. I mean, where do you think the capital markets are heading in the next 5 to 10 years?
So I think that the residential market's going to kind of like taper off a little bit. I don't mean in a
Mhm.
negative way. I just mean like the
Sure,
prices are
just
going to
is what
cool
it
down
is.
a little bit and
Hmm.
settle down. Because what's going to happen is people are going to start putting their houses back on the market. The inventory is going to start being there. People are buying, and it's going to kind of level out a little bit. Whether it comes down or not, I don't know, but it's not going to go crashing. This is all my opinion. So I
Yeah.
think that's going to level out. I think you're dead right about the multifamily. Prices are way too high. I live in, a prominent area in Westchester County, New York, and I got a small little house and it's well over $1 million. And I
Yeah.
can't even
Yeah.
believe it. It's like
It's
so
crazy.
crazy to me, and
Yeah.
I love my house to death, but I'm just like, holy Christ, this is really expensive.
Same thing from Washington. I mean, I grew up in a little town called Bellingham. It's an hour and a half north of Seattle, 30 minutes from the Canadian border. I mean, it used to be very inexpensive, but now Seattle has become so overpriced that now many people that are working in the greater Seattle area are buying as far north as Bellingham, which has saturated the market, driven up home values, and now Bellingham has become another Seattle. So I mean, I hear you. It's the markets have gotten absolutely wild. Phoenix is the same thing. I mean, I moved here about 4.5 years ago, right at the peak, which not the best time to buy, but it was what it was. It was a need
Yeah,
at
yeah.
that point. Now, as we wrap up today's episode, Robert, you've spent decades helping structure deals, deploy capital, guide investors. When you look back on your career years from now, what impact do you hope your work has had on the people and organizations you've worked with?
I hope that I'm I've helped something or someone grow, and taking them from wherever they are, and whether it's their money, whether it's the corporation, whether it's the deals that they're doing. I hope that I've helped them grow and built something meaningful. Sounds so
Yeah.
hokey, but I really do. I want to be a part of something that grows. And again, that
Yeah.
could be an individual or a company.
Yeah, oh, I think very much the same way. I'm like one of my personal leadership tenets and ethos is leaders create leaders, and it extends across context. I mean, the thing that provides me with the ultimate joy and fulfillment is helping the people around me to level up and step into their next level of life. I mean, whether that's financially, in their health, and their relationships, and in whatever context. Now, so I love and appreciate that. I mean, that resonates with me on a high level. Now, Robert, for our listeners who want to learn more about you, your work, or connect with you, where is the best place for them to find you?
They can go to our website is one of the best ones, and our name is a little interesting to try and spell yourself, but it's myom.com, and it's Mary India Oscar Yankee Mary MIOYM.com. That has everything on there. It has our real estate offerings. We do some commercial lending. And then we also have an affordable homes area where we unload our properties to first time home buyers. It's
Oh,
all
man.
on our website. You can find me on
Mhm.
LinkedIn, Robert Costamiras. It's just as it sounds. And if you mess it up, I'm sure I'll come up some way, shape, or form. That's
Hey, we'll put
probably,
in the link. We'll put it in the
yeah,
notes, so
yeah.
it'll be easy to find you. Yeah, Robert, this has been an incredibly insightful conversation. And one thing that really stands out is that behind every successful investment, there's structure, strategy, and relationship built on trust. I mean, capital isn't just money. It's confidence. And the people who understand how to build that confidence are the ones who ultimately shape the deals that get done. So,
Yeah.
Robert, thank you for sharing your insights and experience with us today. And to everyone listening, if this conversation helped you better understand the world of capital and investing, share it with someone who would benefit from hearing it. Follow the show so you never miss an episode. And remember, growth isn't just about what you achieve, it's about who you become along the way. Thanks for listening to the Perpetual Growth Podcast. Robert, it has been an absolute pleasure having you on with us today. Thank you for your time.